Three very special guests and three people who are really the architects of Indian policy making. Amitabh Kant, Ramesh Abhishek and Atul Chaturvedi join us right here in Davos on ET Now. Thanks very much for being with us. I first want to talk to you about the concerns that have been raised and then of course come to the sales pitch that you're making here for India. A PwC survey said Indian CEOs extremely bullish. They see growth go up over the next 12 months. But the intention of investors around the world has dipped. They don't see India as the preferred investment destination right now. The confidence level is down. 18% thought India was a good destination in 2011. 8% think so now. Let's begin with you. What's eroding that confidence?
Confidence level remains extremely high because the FDI inflow continues to be unabated. India continues to be the number one destination attracting investment. We're receiving record inflows of investments from across the world. I think there's also the confidence now that India will be a country with very high levels of integrity, that there will be only a formal economy. The informal economy has been greatly smashed. I think there's also the belief that India will push digitally in a very big way. So you will have virtually no corruption. You will have a country with integrity. You will have a highly formalized economy. And you will have an economy which is well on its path of gradually becoming a $10 trillion economy.
So that's the big takeaway, isn't it? $10 trillion economy. But let me direct the same question to you. What's causing this disconnect from the global CEOs who see India as an investment destination to the local CEOs who are very optimistic? Why the disconnect? Do you believe there's reality on the ground that some of the guys globally don't know about? Have we not been able to make a sales pitch for that?
See, the foreign investor interest in India is reflected in the numbers. In last 2.5 years, we had $130 billion of US dollars of investment, which is the highest ever. And we are seeing a 30% growth in foreign FDI this year. So the numbers show the confidence that foreign investors have. And we are getting information, we are getting inquiries, queries about enormous number of other investments that are planning to come in. Invest India in 1 year, they are facilitating investments of $55 billion.
Indeed.
So I think it is not at all correct. And actually the fact is that FDI interest could not be higher than what it is now.
So indeed a disconnected picture there. But one of the things that people were questioned on, especially Indian CEOs, what are the big risks to their businesses and what are the big risks to growth? And 82% of them actually believe over-regulation is a risk. Do you see a bit of an irony there? Because this government and people like yourselves have tried to wane away regulation, and still over-regulation seems to be a sticky point.
Well, over the years, before 2.5 years, India was a very complex place to do business. But over the last 2.5 years, the kind of things which have happened, the steps which have been taken, the kind of statistics, as Mr. Abhishek mentioned just now, have gone up. In fact, in the month of November, when everyone was talking about demonetization and things going down, the foreign direct investments has gone up by 60%. And industrial production has gone up as well. So all the statistics are going up in that direction, and obviously these over-regulations are being reduced as the time go by, and the kind of ranking which you're doing for the states is changing the ground situation with reference to the regulations and the mindset of the people on the investments concerned.
Indeed, and I think competitive federalism is out in its full force with Andhra making a big pitch here. But Mr. Kant, the question also is that while we're making a big sales pitch and while we're doing all of that, trade barriers around the world are going up. I mean, this is going to be a new world under Donald Trump. Brexit happened, the Italian vote, the French elections coming up. There is this raw nationalism that's on the rise. Many people believe the world will be increasingly anti-trade. Trade barriers will come up. A, do you envisage a situation like that? And B, how does India stand and wade through this crisis if it were to emerge?
Global trade has actually lifted a very vast segment of the global population above the poverty line. Countries like Japan, Korea, China, all of them which have grown post-World War II have grown on the back of trade. And America has been a great advocate of free trade. America's own rise globally has been on the back of free trade. So I think the reality will be very different from rhetoric. You can't say that I'm going to have free trade in manufacturing and not have free trade in services. And therefore, my belief is that while there may be talk of protectionism, but individual companies, individual CEOs would like to create wealth in society. They would like to create wealth. They have to grow. Their performance reflects on their balance sheets. And companies go to places where wealth can be created, and therefore emerging countries would be the places where they would look for. So if there would be a wall of protectionism, Americans would be the worst hit. Because they're getting goods at much cheaper prices. The minute goods start flowing in at higher prices, the American consumers will be the first to get absolutely savagely hit.
So that's really the point, right? I mean, the rhetoric is almost as if the election and the poll rhetoric is being carried on, and yet there seems to be some seriousness about implementing this. I mean, if President-elect Trump's press conference is anything to go by, any jobs that's being shipped out of the US, they will have to pay higher taxes, a wall will be built, things like that. Are Indian CEOs raising those concerns with you? We've got huge exposure to the US, whether it's pharma, whether it's IT. Are CEOs beginning to raise those concerns? And I'm going to ask both of you here.
See, everyone is careful and watching what happens in practice. As Mr. Khan said, that rhetoric is one thing, but what is done actually is different. We have a very globalized economy now, and people look at the value chain. Wherever you are best to manufacture this product or provide the service, people go there.
Indeed.
So you have to be competitive. So this is the name of the game. If anyone who is competitive is actually the right place to go to.
So emerging markets greatly benefited from this trend of globalization. We were the big beneficiaries of this. Do you believe the trend is going to reverse, or emerging markets should be braced up for this new normal?
Well, now with the globalization is taking a different meaning now these days. It's all about how we ensure domestic manufacturing and how do we become part of the global value chain. How do we create jobs, which is the biggest challenge for any country, whether it is US who's talking about creating jobs for their countrymen or whether we are talking about it. That's becoming the biggest challenge, and therefore this whole globalization has taken a different meaning altogether with reference to this.
My last question, and this is a round we must have because a lot of people here in Davos are talking. We're not debating, but we're discussing demonetization. It was a very bold but a controversial step that was taken. And let's be candid here. Do you believe this is a game-changing reform? Nobody denies that. Moving to a cashless economy, being more transparent, curbing corruption levels, being more digital. But do you believe the poor execution perhaps has got the debate heated up?
No, it was a very bold, gutsy, decisive decision. I think it's important to understand that if India is to grow and expand, you can't have a $2 trillion formal economy and have another $1 trillion black economy. And therefore, if the ambition and hunger for Indians is to grow to a $10 trillion economy, then you need to merge the informal economy with the formal economy. And therefore, this convergence and integration was critical. It's been done. And also, I think when people worry about slow growth in 1 quarter, 2 quarter, it's important to understand that as a country, 1 quarter in the history of a country, a quarter or 2 quarter doesn't matter. Even if there's a little bit of a slowdown. We need to look at India from a long-term perspective of 3 decades. Are we going to create an economy which is going to grow and keep growing and expanding? And are we going to create an economy which is going to be an economy free from corruption and black money? And are we going to create a country which is going to believe in integrity? And that is why this is a path-breaking decision.
And long term, of course, it is a path-breaking initiative. But the concerns that have been raised around growth, and I think he referred to that, 1 or 2 quarters cannot make changes in the life of a country, in the life of a nation. IMF, for instance, has cut growth forecasts. Where do you see growth settle? You believe some of those concerns, some of those fears are over-exaggerated?
I think it's too early to predict as to what the numbers are going to be. We have seen the index of industrial production for November. It's a robust 5.7%. So the numbers are still going to come for November, December and later on. And the kind of reforms that are being done today, the monetization cannot be seen in isolation with those reforms.
That's right.
You look at GST, look at this and look at other reforms. I think the combined effect of all this is to make it a much bigger and stronger economy and a more compliant economy.
So the question is, we're not just going to be a digital economy, we're going to be less cashless, but we're perhaps going to be a more accountable economy. The obvious benefits of this, and many people in Davos are saying, your tax base will grow. Do you see that happen?
Certainly. In fact, as just now mentioned by Mr. Khan, that almost 40 to 50% of the parallel economy is going to come into the mainstream, and that GDP size which is going to go up obviously will be beneficial for everyone. It's going to be a win-win situation for everyone, and the country is going to benefit, the poor people going to benefit, and it's going to be a different GDP size which India has never seen in the past.
Indeed, on our way to a $10 trillion economy, it's very glad to be talking to all of you policy change agents in India and key ones at that in conversation with us right here at Davos.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.